Income taxes can seem confusing and scary, but they don't have to be. In this video, I'm going to give you a complete beginner's guide to everything you need to know about income taxes. After you watch this video, you're going to be able to impress your friends with all of your tax knowledge. Okay, maybe not, but hopefully you'll feel a little more confident about handling your taxes yourself. The first tax form you're probably ever going to see is a W-4 form. That's an employee's withholding certificate. You're going to fill that out on your first day on the job. It's a pretty simple form that asks you just for your name and your address, and then it's going to ask you for your filing status. You might file as single, married filing jointly, or head of household, which is a single person that is caring for dependents. The only thing that can get a little tricky about a W-4 form is if you are married and both spouses work, it gets a little complicated to figure out what to put on this form, but you can walk through the instructions and figure it out. So what the W-4 form does is it tells your employer how much federal taxes to withhold from your paycheck every week. They're taking out those federal taxes for you every week and sending them to the IRS. After you've filled out your W-4 form and you start a new job, you don't need to do anything else with your taxes until January of the next year. If you worked a regular job during the previous year, you're going to get a W-2 form in January. A W-2 form is a report from your employer that tells you how much they paid you and how much federal tax they withheld through the whole year. If you got other kinds of income, you might get other forms reporting that to you. Other income generally comes on a 1099. There's lots of different kinds of 1099s. A 1099 INT is for bank interest. A 1099 DIV is for dividends from stocks. A 1099G you might get if you had unemployment income. A 1099 NEC is another really common one that stands for non-employee compensation. So this would be if you had any self-employment income or gig work, like if you drove for Uber. You might also get some forms in the mail if you had certain expenses that might be tax deductible. So for example, a 1098 is a mortgage interest form, or a 1098T is if you paid tuition to a university, or a 1098E is if you paid student loan interest. Whatever tax forms you get in the mail in January, hold on to them. You're going to need them when you file your tax return. So let's talk about tax returns. Almost everyone who had income in the United States during the year is going to have to file a tax return between January and April 15th of the following year. And the form most of us need to fill out is a 1040 form. So a 1040 form is basically a summary of how much money did you make during the year, how much taxes did you already pay through withholdings, how much did you actually owe, and what's the difference? Did you pay too much in withholdings or not enough in withholdings? If you paid too much, you're going to get a tax refund. If you didn't pay enough, you're going to have to pay taxes to the IRS. Thankfully, most of us do get a tax refund. Most people, when they file their tax return, they're going to do it using tax software. And I have lots of videos talking about the best tax software, but the short answer is I like Free Tax USA, but you can watch those videos if you want to see more about why. But you don't have to use tax software. You can download the forms from the IRS or even get paper ones from your local library and fill it out as a form. I don't generally recommend that because it's easier to make mistakes, but I do think looking at the forms is a good way to understand what's going on with your taxes. So let's take a look at the 1040 form. At the top of the 1040, you're just going to have your basic information, your social security number, and your dependents. Now, a dependent, as far as taxes go, is someone you paid more than 50% of their support during the year. Generally, it's children, but it can also be adults. After that, on the 1040, there's the place to report your income. Line 1 is where that income from your W-2 or regular employment would go. But then after that, there's all different types of income, such as interest, dividends, and retirement income. Now notice over here, it says attach Schedule B if required. And then down here, it mentions Schedule 1. A schedule is an extra form that you attach to your 1040 because you have more information to tell. You can figure out which schedules you need using that tax software. So after you've entered your different total income, it's going to come down here and total it up. And then line 11 is important. That is your adjusted gross income. That number is used for other things like government benefits. So that is a number that you might need to know in the future. And that is on line 11 on your 1040. Next up is deductions. Now, deduction on your taxes is something that reduces your taxable income. So, for example, if you had a $1,000 deduction and you have a 10% tax rate, that's going to save you $100 on your taxes. It reduces your income by $1,000 and reduces your taxes by $100. Next, you're going to enter either your standard deduction or itemized deduction. A standard deduction is a certain number that the government says everybody can deduct this amount from their income. Itemized deductions means that you have more deductions that add up to more than that standard amount. If you did want to itemize your deductions, you would be filling out the Schedule A form, and you can see you would add expenses like medical and dental expenses, taxes like real estate taxes, interest like mortgage interest, gifts to charity. Now, there were changes to the tax laws a few years ago that greatly increased the standard deduction amounts, and when that change was made, very few Americans now itemize their deductions. Almost all of us take the standard deduction, which is good news because it's a lot easier to fill out your tax form when you don't have to add up your receipts for your charitable donations and so on. It's fewer things we have to keep track of. But this does also mean when people say things are tax deductible, a lot of times they're talking about things that are on the itemized deductions. And if we're not taking those, that doesn't really matter to us. All right, so let's just assume that you're taking the standard deduction. And over here, it tells you how much the standard deduction is based on your filing status. For a single person, it's $12,550. So that gets entered over here. And then you take your income minus that deduction, and that's going to give you your total taxable income down here. And then you go to the next page and you fill out how much tax you would owe based on that income. This is going to be figured out by your tax software. But if you were doing it on paper, you would use the tax tables. So for us, with a taxable income of $27,450 for a single person, the taxes owed would be $3,098, and you put that right into your 1040 right here. In this section, you're also going to add how much you already had withheld. So this is taxes that you've already paid. In my example, I wrote $4,098 was how much was withheld from our paycheck during the year. The other thing that's in this section is tax credits. Now, tax credits are different than tax deductions in that they're money straight off the taxes you owe. The most common tax credit are the child tax credit, the earned income tax credit, which is for lower income people, and college-related tax credits. And these are money straight off your tax bill, so they're definitely a better deal than a tax deduction. If you have any tax credits, they would be deducted off that amount you owe. And then down here, you'd figure out how much was already paid minus how much was owed, and then that gives you your tax refund. In this case, we had paid in $1,000 more than we owed, so we're going to get a tax refund of $1,000. And then you can give your routing information for your bank to get a direct deposit, or you get a check in the mail. Now, like I said, most people are not going to walk through the form like this. It's not a very good way to do it. But if you're going to be using tax software, let me just show you what it looks like. You're going to be entering in your information and just answering questions about yourself. And don't worry, this is fake information. I'm not showing my own social security number. And it'll just walk you through asking basic questions so you can figure things out without having to use the complicated forms. Now, one of the things I love about Free Tax USA is because they don't charge for federal filing, they'll actually let you look at your 1040 form before you file. And when I bring up the 1040 form for this sample person, you can see that it came up with the exact same numbers I did. $3,098 for the tax owed, $4,098 for how much withheld, and then a refund of $1,000. What do you do if you ended up with a way bigger tax refund than you wanted, or you ended up owing and you're unhappy with how that went? Well, if you work a regular job, the most important thing you can do is go back and adjust your W-4 form. If you owe the IRS and you don't want to owe next year, you want to make sure that your employer is withholding more money than they were before. Or if you got too big of a refund, you can have them withhold less, and then you get more money in your paycheck every month instead of getting such a big tax refund. So if you're getting ready to file your first tax return, make sure you watch my video about the best tax software out there, or just use my link down below for Free Tax USA.